Historically, spring is when the housing market comes alive. Buyers are out touring homes, sellers list properties. Homes usually sell fast, not in 2026. Buyers aren't showing up. Homes are sitting longer, and sellers are refusing to play ball. But here's the thing, and you need to pay attention to this. Most housing markets across the U.S. have rising home prices. That's right, rising prices. And folks, I track 3,000 counties and 900 metros throughout the U.S. And for the most part, the majority of them still have rising home prices. So how does this even make sense right now? You may be wondering that. You probably are. Let me show you. First on our list, we're going to look at Tampa Bay. So check out Tampa Bay as an example. And this is pretty crazy. And this is how the markets are split. Tampa Bay, 25% of all listings have had a price cut. 25%, a quarter of all listings have had a price cut. Homes are sitting 21% longer than they did this time last year. So if I go to median days on market, look at this. 80 days in Tampa Bay right now to sell a house. That's median days on market to actually get it in contract, 80 days. And you can tell that that's up dramatically. So you've got more price cuts, longer days on market in Tampa. But check this part out. This is even crazier. New listings of homes for sale. Shout out to Mr. John Brooks in Florida. Look at new listings. New listings are down this year compared to last year. Down this year. So you have fewer people actually putting their house on the market in Tampa Bay, Florida than last year. Where's the distress? Strange, right? So lots of price cuts, longer days on market, and lower number of people listing their house. So it's not really a slow market. Sellers are probably in panic mode in Tampa. Now, let's go to the next metro and let's look at Nashville, Tennessee. So look at Nashville. When we look at days on market, up to 60 days right now for days on market. So they haven't had, homes have been sitting now longer on the market in Nashville than they have in the last, going back 10 years. 10 years. But look at this part. Look at pending sales in Nashville. Pending sales, 4,034 properties in the month of February. That's down from last year. So right now, fewer buyers out there purchasing homes in Nashville. Homes are sitting longer. 2 years ago, homes were flying off the shelf in Nashville. Not anymore. Check this one out. We're going to go out to Phoenix, Arizona. Find out what's happening. Look at Phoenix. Price cuts in Phoenix, 30%. 30% of all properties, 28%, I'm rounding up, but 28% of all properties have had a price cut right now on the market in Phoenix. And that's really the highest of any major metro in the U.S. Nearly 1 in 3 homes in Phoenix has had a price cut. But here's the thing, and this is important. There's a completely different story happening somewhere else. And it's just as bad, but in a different way. So look at New York City. And check this out. The New York City metro area, folks, is a crazy housing market. Pending listings are down 27% since last year. So you've got 27% fewer people buying houses, buying properties in New York City. But look at active listings. Check this. This is even more bizarre. Look at this. Active listings are down. Since 2019, active inventory is down 50% in New York City. 50%. So they have 50% fewer houses for sale right now than they did in 2019. And look at price cuts. Wait till you see the price cuts in New York City. What do you think they're going to be? Are they going to be high? No, 6%. That's it. 6%, meaning only 6% of all the houses, all the properties listed, residential properties listed in New York City metro area right now, only 6% have a price cut. In Phoenix, you're at 30%. New York City, only 6%. Now, in New York City, let's look at prices. Let's look at prices and see how they're doing in New York City. All-time record high home price in New York City, 730,000, I'll round up, 730,688. So homes have never been more expensive in New York. You only have 6% of all listings cutting their price. Yet pending sales are plummeting, meaning buyers have ran away from the market. Sellers aren't worried. There's not distress there. It's not showing up. Obviously, if it was showing up, you would see a lot of sellers cutting their price, a lot more new listings hitting the market. Active inventory still down right now, folks. Down since 2019, 50%. What inventory explosion are they talking about in the Northeast? I can't find it. We're going to keep going. Let's go to Columbus, Ohio, near where I live, Columbus, Ohio. Columbus, Ohio. Prices in Columbus are up 51% since 2020. 51%. Since 2022, they're up 10%. Meaning they got 40% of that appreciation in 2 years. 2 years, that's it. But there are cracks forming in the Midwest and definitely in Columbus, because check this out. If I go to pending sales, median days on market. Let's go to median days on market. 55 days. 55 days in Columbus to put a house in contract. That's 44% longer than 2 years ago. So Columbus houses are sitting longer. So it looks fine on the surface. An area like Columbus looks fine on the surface, but homes are sitting 45% longer than they were 2 years ago. Something is definitely changing in the Midwest. There's no doubt about it. There's no doubt about it. All right. So whether you're in a correction market like Phoenix or Tampa, or a frozen market like New York City, or a weird market like Columbus, this spring recovery of the housing market that everybody's been waiting on isn't coming. I mean, spring's here, folks. And if you're trying to decide whether to buy a house in 2026, this channel is for you. This live stream is for you. My name is Jason Ferrier. I am the housing nerd. I am the housing nerd. And I'm a realtor. I'm an investor just outside of Columbus. I'm not a financial advisor. I'm not a accountant. And this is not financial advice at all. But it is your chance to learn about the housing market. So for the next few minutes, I'm going to show you some more broad level metro United States look on the housing market, but then I'll dive into the metros that you want me to review. So if you have a metro, a zip code you want me to hit anywhere in the US, drop it in the comments and I will get to it. We're going to go for about an hour and a half today. But so far, what you've seen is that the market is definitely split depending on where you live. And now we're seeing the Midwest definitely change with inventory, although it's not an explosion of inventory by any means. We're definitely seeing homes sit longer. Buyers have kind of stayed on the sidelines. I'd like to know what you think about that. Why is that? Is it interest rates? Is it the war? Is it a black swan event or a purple swan or a brown swan? I don't know. You tell me. But anyway, glad to be with you guys. It's been a while since I actually have done a live stream. So drop your comments in and I will review your markets. So you tell me where you want me to go. All right. So my first area, let's get to it. And actually what I could do is do this. I'll just go to an overview of the market from a United States look. So let's start with inventory. So inventory in the US year over year. Actually, you know what? Let's do this. Let's go to 2019. So this is a comparison of the number of homes for sale right now versus 2019. And the brown states are down, meaning if you see a brown state, that means you have fewer inventory, fewer number of homes for sale versus 2019. And that's simply where the housing market has not recovered at all in those areas. And this is why the housing market has just got a lot worse. It just continues to get worse for a lot of people. So you can see the Northeast and the Midwest, pretty much inventory is down significantly versus 2019 before COVID. Look at Ohio, 37% fewer homes on the market than 2019. Look at New York, 46%. Look at Maine, 52%. Connecticut, are you sitting down for Connecticut? 80% fewer houses right now versus 2019. There are people on YouTube that you will hear that tell you some kind of weird narrative that the Northeast is changing, the demographics are taking over, and inventory is exploding in the Northeast. Well, if that was true, I guess they all avoided the Northeast because Connecticut, New York, Maine, New Hampshire, Vermont, Pennsylvania, Maryland, New Jersey, West Virginia, Ohio, is that the Northeast? I guess it is. Maryland, all these areas, all these states in the Northeast have fewer houses for sale than 2019. Look at the Midwest, same thing. Indiana, Illinois, Michigan, Wisconsin, Minnesota, North Dakota, South Dakota, Iowa, Missouri, Kansas, Arkansas, Kentucky. Is that the Midwest? For me, it is. All these states in the Midwest have fewer homes for sale than 2019. If I go down south, one would think we've seen a lot more inventory growth, right? Like, hey, a lot of houses have hit the market, right, in the Sun Belt. Well, North Carolina, South Carolina, Georgia, Alabama, Mississippi, Louisiana, Arkansas, Missouri, all of these have fewer homes than 2019. Florida's only up 4.4% since 2019. So this inventory explosion hasn't really materialized, but I'm going to tell you why that's a massive warning sign in a few minutes, because it definitely is. It's a big warning sign. It's bad for the spring housing market. If you're a buyer, fewer choices. If you're a seller, if you price your home right, it should sell faster, theoretically, right? But then if you go out west, look at this. You've got areas like Wyoming, New Mexico, Montana, Oregon, Nevada, even California. You've heard narratives about California inventory exploding. 21% fewer homes than 2019. And that was a normal market in 2019. We're not even close to that in a lot of these areas. Texas is probably one of the areas where inventory has exploded the most, up 28% since 2019. But look at this part. Look at new listings. Look at new listings. Again, Brown is down. So new listings, people putting their house on the market, not active homes on the market, but just sellers deciding to list. Again, Northeast, Midwest, a lot of states, even out West, have fewer new listings than 2019. Ohio down 20%, Pennsylvania down 30%, New York down 34%. Look at New Jersey down 52%. That means if you live in New Jersey, there are half the number of new listings hitting the market right now this spring. This is not seasonality. This is year over year, comparing the same time of year, right? So I'm not comparing summer to winter. So regardless of what happens with demand, if nobody's going to list a home, there's no inventory. So if you're in New Jersey, look at that, down 52%. Connecticut down 52%. Look at Florida. Shout out to John Brooks in Florida. What's up, John, in Florida? 7% fewer new listings this year. Where's the distress? Remember all the Airbnb, the mom and pop landlords, institutional investors, all that BS. Where are the new listings? Wouldn't there be tons of new listings hitting the market if sellers were completely desperate? They're down 7% in Florida since 2019. Unreal, right? We go out west, same thing. California, Nevada, Arizona, New Mexico, Wyoming, Oregon, Washington, North Dakota. All of these have fewer new listings than 2019. Here's what's crazy. Look at new listings compared to last year. Florida is down 13% in new listings compared to last year, not 2019. So there are 13% fewer people listing homes right now in Florida than last year. Did something happen in Florida I'm not aware of? Where's all this distress? Let's find it today. If you know of an area that's distressed in the housing market, lots of listings, prices crashing, put it in the comments. Let's go look at it today, right now. Even Ohio, down 2.5% in new listings. People just don't want to put their homes on the market. They don't need to. They're cool. They're like, I got a low rate. I got a lower price. I'm good. Not good for buyers, right? Makes it more difficult. Now let's look at prices. Everybody wants to know what's happening with prices. And I'm going to get to, and I'm going to get to your metros and your zip codes. Just drop them in the comments and I will get to them. All right. So let's look at, first, let's look at home prices year over year. And the blue states are where home prices are still growing. The yellow states and then the red states are where home prices are falling year over year. We're comparing right now. Well, this is the as of the end of February. We're comparing the end of February to the end of February last year. So you've got like Ohio is up 3.5 or 3.3% in prices, right? In values. New York State up 4.5%. Illinois up 4.6. Kansas 2.8, right? As an example, you can see here on the screen. If you have a metro or a zip code, put it in the comments. We'll review it here in a couple minutes. Florida down 4.6%. That's actually performing the worst in the U.S. So what you should know is that the price gains, the price growth is slowing down, right? So you're not seeing 10% growth anymore in these states of prices. So that's good news. And some of them, like Ohio, only up 3.3%. If inflation's up 2%, it's really only up 1.3%, right? So prices aren't completely going bonkers crazy, but they haven't crashed. They are up in 72% of 3,000 counties throughout the country. Folks, I know these stats. I look at them every day. I'm in the housing market every day. This is all I do. I'm not going to give you broad stroke narratives with no data. I'm giving you data right here. I'm not hiding it. It's right here in front of us. 72% of all counties in the U.S. Right? Am I getting my stat right? I just pulled this morning and reviewed it. Make sure I get my stat right. Let me make sure. Yeah, 72% of all counties have higher prices than last year. That's out of 3,000 counties. So when you look at the map of the U.S., easy to see blue through the Midwest, blue through the Great Plains, a lot of blue in the Northeast. You get down south, fewer price gains, more price declines, no doubt about it. I think that will continue as we move through 2026. Now let's look at since 2020, how our price is doing. Blue states mean home prices are up versus 2020. They're all blue. Well, Louisiana's yellow, but up 7.6%. But look at some of these gains. Florida's up 47%, Georgia's up 52%, Texas only up 34%, 35% since 2020. Look at Ohio, up 53%, New York up 43%, California up 38%, Utah up 51%, Montana, goodness gracious, up 66% in prices since 2020. Nuts, right? Completely crazy. And that's what we're looking at. We got a ton of data to examine. Let's get to it. Hey, you're welcome. New 11. You're welcome. Thanks for joining us. AJ, what's up? Yes, I see that house prices aren't coming down. Super weird. They will though. In some areas, I think they will. And they are. Or I mean, prices are coming down. Like, it's not like they're like, I mean, the growth is coming down, right? Overall. When I look at a county look at this. This will fill in the county for us. But blue is, let me go to year over year. So blue is where prices are still going up, right? Year over year, not versus 2019 or 2020. Year over year, Zillow Value Index, same metric that Nick Gurley uses at Reventure Consulting, same type of data a lot of housing analysts use. But you can see in the Midwest, Northeast, prices still going up. But if you go down south, AJ, no doubt there are places where prices are falling. But if you're in Ohio, I think maybe you are, prices are not falling here that much. There's not a lot of price decline. But thanks for joining us. West Phoenix Metro is dropping a lot. East Phoenix Metro is slowly dropping. Upscale Phoenix is mostly stable. Yeah, give me some zip codes, man. Let's look at some zip codes. You're in New Jersey. Man, New Jersey is tough. That's a tough market. Like, it may be the hardest market in the U.S. when you think about, when you think about overall health, right? Not like decline. Look at this. If I go to New Jersey, I'll zoom in here. And then I'll drop in county and look at this. So home prices in New Jersey, you could see Atlantic County up 3.7, Ocean County up 3.9, Monmouth, up 2.8, Burlington up 2.7. So prices aren't exploding anymore, but they're not falling, right? They're not crashing. And the inventory there is absolutely awful. Like, it is so bad in New Jersey. Look at this. Versus 2019 before COVID, Ocean County, 65% fewer homes on the market. Burlington, 64% fewer. Atlantic, 56% fewer. Camden, 65. Gloucester, down. It's down 75%. I can't even say it. Down 75%. You got 75% fewer homes on the market. You're not going to have a price crash when that happens. And if I zoom out from New Jersey into the Northeast, there isn't really one county, maybe a couple little tiny ones I can't even hardly see on the map, where you have more homes for sale than 2019. Next time you hear someone on YouTube talk about demographics in New Jersey and the Northeast and how that's changing quickly and inventory is exploding, I want you to ask them to pull the data instead of just telling you a narrative. Because what I'm seeing tells me there's nothing for sale. And it's not shadow inventory. It's not off-market deals. If you got to sell your home, you're going to put it on the market. New Jersey is wrecked. No one here worried about a potential energy crisis affecting our industry. I'm not. No, I'm not. I mean, demand is, well, it depends on where you are, but demand is horrible in the housing market right now. Like, we're at the bottom of the barrel on demand. Like, only the people that need to sell are selling. Only the people that need to buy, in a lot of cases, are buying. I mean, with a few exceptions, right? There are people that job changes and things obviously motivate them. But my point is, like, I don't know. It is what it is. Like, there's nothing we can do about it. But it'll definitely offset any type of, like, it could, to your point, Alexander, thank you for joining us, and good luck in your realty business. It could offset any of the supposed big tax returns that people are getting, income tax returns, right? Remember, they were touting those as a big deal. But when people go to the pump, they do pull back. So would somebody go to the pump and see 50 cents higher in gas and then go, I'm not going to buy? Maybe. I don't know. Oh, we got a good zip code here. Farmingdale, New Jersey, 07727. Yeah, let's look at that one. 0. But it's a beautiful early spring day here in Ohio. I'm out on the porch finally. So life is good. All right. So inventory in that zip code, 07727. Thank you for suggesting this. And that is Farmingdale. Is that how you say it? Yeah, Farmingdale, New Jersey. Down 63% in the number of homes for sale versus 2019. Basically, you have nothing on the market, right? You are up 20% versus last year. But see, you got to go deeper than that. And that's why I go back to 2019 and go, well, what's normal? Well, if that's normal, we're in a world of hurt. Look at this. Right now, you got 12 homes on the market in that zip code. Just 12. Go back to February of 2018, for instance, you had, 35 homes. So you had a lot more homes back then. I mean, 35 still not a ton, but it's better than 12. Let's look at median days on market. How long are homes taking to sell? Wow, 149 days. A lot of these markets are like that. I'm looking at these areas going, wow, homes are sitting longer, but there's no inventory. If we had a lot of distressed selling right now, like people had to put their homes on the market because of whatever catastrophe, then the housing market prices would crash because there's no demand. There's no demand. And then maybe buyers would come in as prices start to drop, right? But unless interest rates fall through the bottom of the bottom of the barrel, I don't see demand improving at all. Really, there has to be a catalyst for demand improving. What's the catalyst? There's nothing for sale. So there's not a lot to choose from. Prices are still high. Interest rates are now, 6.5% or so? They went back up. That plan didn't work by the administration, right? We're going to buy mortgage-backed securities to make house prices cheaper. Oops, that didn't work. And by the way, Trump came out and said, just wait a little while longer. Okay? I've heard that story before from other people. Just wait to buy a house. Keep waiting. I'm not saying you shouldn't wait, but I don't know. What's the catalyst for more demand, right? What's the catalyst for more people listing their house in New Jersey? I don't know. Let's look at new listings. How are those doing? Oh, boy. Wow, you're down 100% in new listings versus 2019. 100%. People just aren't putting their houses on the market there. What about pending listings? How are those doing? Yeah, those are down a ton. Look at this. Pending sales you only had 14 last month going to contract. Back in 2022, you had 74 homes going to contract. That was a busy market, right? Not anymore. Not anymore. Let's look at prices now. Prices for 07727. They're only up 1%. See? So they're not even keeping up with inflation. So home prices aren't exploding there, but they haven't come down. And that's like perplexed and frustrated a lot of people. A lot of people called for big house price crashes this year and last year and the year before and the year before that and the year before that. They haven't got what they wanted because they're not looking at the right information, and they're certainly not being honest with themselves. Look at the typical value in Farmingdale, New Jersey. Right? Farmingdale. Look at this. 806,648. Is that an all-time high? Let's find out. 806.48. Yes. So right now you have an all-time high record price, record home value in 07727. Homes have never been more expensive in Farmingdale, New Jersey than they are right now. So you got buyers on the sidelines. You got sellers on the sidelines. Prices are just stuck. And I mean, where are you going to build new homes in New Jersey? Where? I don't think there's big subdivisions there. Got to be really difficult to build houses, especially anything halfway decently, even remotely affordable. Man, New Jersey is rough. I don't envy you there at all, man. Rough market. Who said sellers were desperate? Oh, man, there are tons of people on YouTube that say sellers are desperate. I mean, you can see it on like Fox News. They'll say that stuff. You'll hear people say there's a lot of motivated selling turning into distressed selling. Remember, Hank, all the Airbnb collapse, mom and pop landlords, government jobs being cut, credit cards, buy now, pay later, auto loans, student loans, mortgage defaults, foreclosures, FHA. I mean, the list goes on and on and on and on, right? Boomers, the silver tsunami, can't forget that. All these people are desperate to sell. Like they've got to list their home. They've got to sell it. They've got to cut prices. Well, they must be on the moon or something, because the inventory is just woefully low. We haven't even had an unemployment spike. We'll see what happens then. Sure, add that to the list, right? And absolutely, if a bunch of people are unemployed, will they have to sell their home? They could, yeah. But so far, we're not seeing that. Like, this is not what we're seeing. By no means am I saying the housing market's awesome. Like, people will rag on me on these comments all the time. And they're like, oh, you're a realtor, so you say, oh, it's, always a good time to buy. First, I never say that. And then they'll say, if prices always go up. No, I never say that either. They definitely don't always go up. But we haven't seen this massive crash, and we haven't seen this massive explosion of inventory. Look at Florida. Florida has fewer new listings than last year. Somebody explain that to me. If you're watching this and you think Florida's going to crash, or that the housing market is crashing, explain the new listings to me. Explain how fewer people have to put their house on the market if it's crashing. You can't sell your home without listing it. But thanks for joining me, Hank. You always are in. I love it. I love it. My guess is that FHA mortgage foreclosures were delayed so bad that it'll keep prices from falling. Maybe we'll see some downward pressure when foreclosures get going again. Remember this, though, and people who talk about, and this is by the way, thank you for, I wish I could make that smaller. Tall. Let me try that. There we go. The people on the, when you see them on YouTube particularly, and they talk about the FHA stuff, you should really look at that data, New 11, because FHA represents about 14% of the total market. So if you take all the FHA loans and you take all the loans in the US, well, first off, 40% or 41% of all homes have no mortgage at all. They're owned free and clear. They still have to pay property taxes, but they're owned free and clear. But of the 40% that have a mortgage, only 14% of those are FHA. So when you talk about FHA mortgage distress of, let's pretend for a round number, 10%, it's 10% of 14% of 40%, right? You see what I mean? So like, if there was a massive amount of problem in FHA, that's still not the bulk of the housing market. But people who I just want you to know that, because as you hear those narratives, don't be fooled, don't be trapped into thinking, there's going to be hundreds of millions of foreclosures coming to market. There are going to be more foreclosures this year because they did artificially suppress them. We know that. So that's definitely going to happen. But it's not like it's, 500,000 listings a month. I mean, right now we're getting like 80,000 new listings, 90,000 new listings every week. Leading up to the great financial crisis, we were getting like 250 to 400,000 a week of new listings. So you just got to have you have to have a catalyst for forced selling and for an explosion of inventory upward quickly, for prices to decline quickly. Otherwise, we're going to get what we get right now, basically stagflation in the housing market. It's like, I think it's interesting, but a lot of people want carnage and they're not getting it. What's up, Hank? You got another comment. And to say we'll never have an unemployment increase again would be moronic. Oh, well, obviously we're going to have an unemployment increase. There's cycles. I'm sure unemployment could increase and may very well increase. I'm not saying that at all. I'm saying right now, when you look at the housing market data, sellers are not desperate. Got a zip code 75087. That guy's excited. So am I. 75087. Boom, right into Texas. Where are we going here? That is Dallas, right? Up north there. I like Dallas. Let's look at inventory. Wow, completely different than New Jersey. Goodness gracious, thanks for asking about this, JQ. So you have 56% more homes on the market than you did in 2019. Way different than New Jersey, right? Way different. Look at the active inventory count. 254 homes on the market. Last year, you had 199. You go back into COVID levels into 2021, you only had 30. Look at this. Look at this data. 36 homes on the market in 2021. People were running out like people like they had like their hair on fire. They're like, I got to buy a home. I got to buy a home. I guess they did. And then people were like, I got to sell a home. So then inventory increased rapidly. Now, let's look at new listings and see how they're doing. How are new listings? They're up 18% since 2019. So you got more people putting their house on the market than you did before COVID. That's way different again than an area like New Jersey. But let's stay on this though, and let's go now to median days on market. Yeah, median days on market. Yes, 63 days right now. Last year was 73 days. And during COVID, it was only 42 days. So homes, I guess, aren't sitting that much longer, actually. That's interesting, right? So homes aren't rotting on the market, in reality. Let's look at, we should look at pending sales too. 91 pending sales in February you had in that zip code, 75087. Looks like it's just east of Dallas. And then last year you had 86 pending sales. So demand is still kind of just flat, right? So you have more inventory, more new listings. Demand looks like it's flat because it's the same number of homes are going into contract pretty much through the last few years. And now let me look at prices. So prices, they're down 3%, and they've been down for several months. You've been dropping in prices. And let's look at the typical value of the house. The typical value is not the median. It's not the average. It's the 35th to 65th percentile of all the houses. So like the middle range of homes that sell. They take out the outliers. 446,118, and that's down from your peak. How far is it from the peak? It's down, let's see, you peaked at 481, 482. So yeah, you're down 40 grand. What's that? 10%? My math right? Let me look. Well, since 2022, prices in that zip code are down 7%. So there's a price decline for you, right? And I would say if you continue to see more active homes on the market, more new listings hitting the market, prices may continue to fall. I would watch those active listings. keep tuning into the Housing Nerd, or you can do the research yourself, and we'll keep looking at these markets. But yeah, you could end up seeing, you could definitely end up seeing further price declines. So if I look at prices like year over year around you, around the zip codes, what else do we have? Look at 75166, just north of where you are. Prices are down 8%. 8% year over year. There's some serious carnage there. And look at back in 2022, and I don't know the Dallas market intimately. So some of this, you probably know these areas better than me, but look at this. Prices were going up 30% year over year. They were going up 30% versus 1 year ago back in 2022. That's when everything spiked. A lot of markets spiked with their prices in 2022. Then inventory went bonkers up, and that causes, what does that cause? Price decline. And you got price decline. So how far is this zip code from the peak? Look at that. That zip code's down 20% since the peak. 75166, wherever that is, north of you. And then these other zip codes around you are all down. They're all down in price, pretty much. And if I zoom out in Dallas, only these markets kind of in the city, right? I guess that's downtown, I suppose. Those are blue, which means those prices are up, but everything else is red. Everything else is red. Wow, interesting stuff. Thank you for suggesting that. Rockwall, Texas. I think that's near Dallas. I hope I'm saying that right. Okay. What's up? Can we look at housing prices? From what I understand, a very significant percentage of U.S. homes are losing value by the day. Yeah, we can. We can look at that. I just had this in front of me. I want to make sure I get it right. Okay. So, Hank, if I look at metros, if I look at the top 900 metros in the U.S., and there's two things to look at with home prices. There's month-over-month decline, and there's year-over-year decline. Month-over-month decline happens in a lot of areas, and it basically happens in the U.S. every year. Every winter, month-over-month, home prices fall, right? They fall from, like, let's pretend August all the way through to whatever, February. Then they go back up. But every time they go up, or every time there's a decline, it's still higher than the previous year. That's what you have to look at, right? Because if you just look at month over month, that's not really taking into account a year over year standpoint. So when I look at year over year, everything here, these are all major metros. All the blue ones are up year over year. All the ones that are red are down year over year. 72% of 900 metros, 72% still have higher home prices this year, right now, versus last year. And that's really important, right? So you'll get caught in these narratives by people telling you home prices are losing value in the majority of the US. Well, they always do every winter. But if you look year over year, they aren't. But it's not all of them. It's 72% are up. 65% of 3,000 counties, if I go to a county look, 65% of counties are up year over year in home prices. Now, important to know, some of these counties could be up like this county here, wherever this is in, I don't even know okay, Elko, Nevada, up 1.2%. That's it. Doesn't mean they're up like 10%, it just means they're above zero. But 65%, I analyzed 3,000 counties, actually 3,073 counties to be exact, and 65% of those have rising home prices. You can download that data for free from Zillow in a spreadsheet and analyze it yourself. You put it in ChatGPT or Claude and have it run some figures for you and see if, check my math. 38% of all metros are up 50% in home prices since 2020. 38% of them. So the majority of counties in the US, the majority of metros still have rising home prices versus last year. But it's not all of them by any means. So hopefully that answered your question. Yeah, how few have falling prices? Right. Wow. Look how little of the map is increasing in value still. Nothing to see here, folks. And this is with stable employment. No, that's wrong. You've got 70, I'll say it again, 72% of 900 metros, 72%, which is the majority, obviously, have rising prices. But they're not all blue. Blue on that map means a bigger increase than, than a few percentage points, right? So like I come through like let me show you what I mean. So like this county here, Knox County in Ohio, up 5.2% in home prices versus last year, right? But then if I come down here into Pike County, was that Tennessee or could be Kentucky, down 13%, down 14%, right? So it's definitely depends on the market, but overall, you've got more metros with rising prices than falling prices, more counties with rising prices than falling prices year over year. That's what you want to pay attention to. Month over month is irrelevant because every year home values drop and rise with seasonality. So, and again, you can download all that data raw if you want from Zillow, and then it gives you everything. The whole shooting match. Or you could subscribe to Resi Club. I think the Resi Club subscription now is like $4,000 a year. If you use my name, I get a bonus. So, but you could just tune into my channel and you don't have to pay for it. Rental prices came down a bit in 43123. I saw two separate 3-bedroom houses for $1,900 a month, where it was $2,300 and $2,600, and even apartments are a little lower. Yeah, I mean, rents, we can look at rents too. I got rent stuff. This is that one I messed up yesterday, I think last week, right? Wrong zip code. 43123 in Ohio. And this is just southwest of Columbus, right? So let's look at rents and see what you got going on. I'm not saying you're wrong. You're probably right. So I got the typical rent. Well, so typical rent right now in that zip code, 1,500. That was cool. Did I do that? $1,539 is your typical rent. Is that down? I mean, it's down $1 from last month. But you may be seeing prices start to fall, especially a lot of high-end stuff I'm seeing. And let's be honest, a lot of landlords price themselves out. They bought a property too high, right? They spent way too much on a home to rent out. And now they're trying to force rents up to make the numbers work. You can't really do that. If you buy a rental, which I recommend buying rental properties, I think rental properties are fantastic if you buy them right. It's not all roses, but if you buy one, you got to make sure you buy it with the idea that rents may fall, right? Don't bank on massive rent increases. But I think you will see more and more rent decline over the next year in the U.S. overall, especially here in Ohio. I think you will, because of lower end rent. I don't think will move much, but higher end rent I think will come down because they're building tons of apartment buildings. In fact, they're building a ton of multifamily here in the Midwest compared to single family homes. That's what they're building is multifamily. That's where all the permits are. And so a lot of these new, apartment buildings and complexes that have pools and all their fun gadgets and stuff with them, and they're all like loft style and granite counters and everything. They got to charge a lot to make those numbers work. So I think those will, they won't fill them, and then they'll have to drop the rents. So I do think rents will fall. Oops, I should have put your stuff up. No crash, bro. Right, I'm not going to be a crash, bro. I'm just going to give you the data. I don't care if prices fall. I don't care if they go up. I can't control that. Why care about it? right? So I don't go to bed at night going, I hope prices fall, or I hope they keep going up. I'm like, well, whatever it shows, I'm just going to present it. Or Texas. People love Texas. People love me from Texas. Can you do shirts, Texas? Okay. Yeah, you're welcome. Thanks. You're welcome, Ty. 78108. Real quick, by the way, you can go to jasonferrier.com/free. I've got a free buyer guide that gives you just an overview. Here it is right here on the screen. Gives you something about should you buy or wait in 2026. And it's really like a test, a litmus test for you and whoever you're buying a home with. Maybe it's just you that say, all right, am I ready to buy a home or not? Or am I ready to move forward? And it's free. You can download it. And yeah, that may give you some help if you're looking to buy instead of just listening to like a headline or a realtor or something. Kind of do your own assessment. All right, I got a few more I can do here and then I'm out. So 78108. And I'll try to do another one of these live streams at the end of the week once I get the new Redfin data. But I haven't done a live stream in 2.5 weeks or so on the national channel. So I wanted to go ahead and get one done, early this week and update y'all. So active inventory in 78108, and that is Shirts, Texas. Okay. And where is that? Is that 78108? I'm just looking like as far as San Antonio. Okay, got it. We're in the San Antonio market now. Inventory versus 2019. Look at this. You have fewer homes for sale, 7%, 8%, fewer homes than 2019. How are you year over year? You're up 15% in inventory year over year. Active inventory count, 260 homes right now. Well, as the beginning of the month, 260 homes. Last year, you had 227 homes. I go back to the COVID levels or COVID times, you only had 57 homes. See that difference? That, friends, is a big difference in inventory. That is what you need to see in your chart if you want to see price decline, because I'm guessing there is price decline here. But before we get to that, let's look at median days on market. 93 days. Homes are sitting longer right now in this zip code outside of San Antonio, Shirts, Texas, 78108. Homes are sitting longer than they have in the last decade. I go all the way back to 2017 on this map or this chart, and homes have never sat longer. So homes are taking a long time to sell comparatively, right? Now let's look at new listings. How many people are putting their house on the market? Wow, that's down. So you have fewer new listings than last year. Fewer new listings than last year. And actually the new listings are about the same. I mean, they're down a little bit from historical trends, but they're not like horrible. So it must mean buying demand is low, right? Yeah, look at the buying demand change. Goodness gracious. Look at this. You had, like right now, 119. That's actually an increase recently of people putting homes in contract. But if you go back the last few years compared to the years prior, these last few years, just people were not putting homes in contract there. And so that inventory just continued to grow. Now let's look at prices. Yeah, okay, so prices, you're down 1.4% in prices. And it's been down like all the way. I mean, you started to decline in May of 2023 and prices have continued to drop. So I wonder what they actually look like. Let's find out. Definitely not an all-time high. 328,142. The peak was right around here in July of 2022 at 362, right? That was kind of the peak. So right now you are 328. So you've lost 40 grand, right? You've lost $40,000 in the typical home value. I'm wondering if how you are since 2022 peak. Wow. Since 2022, you're down 10%. Since 2020, you're still up 27%. So that's like approximately a little over 5% a year, right? Not quite 6, so between 5 and 6% a year in home value appreciation. But you can see how, look at the price, look at the typical value. This is fascinating. At least I think it is. I can move that around too. I didn't know that. Look, let's kind of demonstrate it. Look in, if I go back to 2022, when you peaked in home prices, it was in August, right? You can see typical home value 362. Now, look at this. If I go to inventory, my fingers are cold. Still a little chilly out here. Still a little chilly. Look at the inventory growth and how it affected prices. This is a great exercise. In 2022, in February, right before you peaked in prices, you had 52 homes on the market. This time of year, but go back to 2022, right? Then look what happened. You went from 52 homes to the following year, you had 196 homes. And what happened to prices? That's when they fell. They peaked like, what, right around here, right? Like literally in May of 2022 is when prices peaked. And then all of a sudden, inventory went vertical, right? You added more and more homes to the market. And now prices have continued to fall. That's how it works. As simple as that. So you want to look for that in your own market. Are more price, you've seen a lot of inventory. If you are, watch out, right? Prices could fall. If you're a buyer, that's good news. I hope that helped, Ty. Thanks for suggesting that. I love looking at these areas of the U.S. What's up, Lisa? If y'all need a good realtor in Kingman, Arizona, Lake Havasu, contact Lisa. By the way, Lisa, I was just talking about you. It's funny. I was talking to my wife about this because we're actually going to maybe, I think we're going to book a trip, a family kind of get together trip in Lake Havasu, I think, in June, which is probably like 400 degrees outside. But anyway, I may reach out to you and get some ideas from you on where we should stay. I think my wife's already picked it, but maybe I can get some data from you. Anyway, if you guys need a good realtor, Lisa is in Kingman, Lake Havasu area, and it looks like there's some deals there. So what's up, Debbie? I just saw that average house price in Greenville, South Carolina is $415. Their prices used to be insanely cheaper than Ohio. Goodness gracious. Yeah. Unbelievable. Oh, okay. Marco Island, Florida condos. Yeah. Let's do that. I'm just going to just type in Marco Island, you think? Well, it's going to give me Marco Island and Naples. Is that okay? Let's look at condos, though. I don't have condos on an inventory level. All I have is prices on condos, I think. So prices for condos in the Naples, Marco Island, Florida area are down 8% year over year. 8%. Now, I'm not going to do it on today's live because I don't have enough time, but and my battery's actually almost dead. But you can go to Redfin and go to their monthly data sets and download and look at information on condos specifically and all the metrics. I think even down to like a sub-market level. If you go to Redfin, it's free. You just go to their data center, look for the monthly info, not the weekly info. The monthly data is below the weekly stuff. Anyway, if you want to look at condos specifically. But let's look at, so I just have condo year over year. Thought I had more condo stuff. Here, typical condo value. How's that done? Wow, that's dropped a ton. 407,589. It peaked at 491. So you're down 100 grand, nearly 100 grand. I mean, not quite, right? We're not quite 100 grand, but we're approaching 100 grand. So probably what's that, a 23% drop probably in values of condos in Marco Island since they peaked? Yeah, if you bought around the peak in Marco Island, you're probably hurting. I mean, you're not hurting, but you're probably down in value. But that doesn't mean you have to sell, right? I think that's what's going on. I mean, go back to look at condos in Marco Island, like back in 2006, they peaked at 391 and they bottomed out at 197. So that was like a 30% drop. And then they went crazy again during COVID and now down. So let's just look at the active inventory though in that area. Yes, since 2019, you still have 10% fewer homes on the market versus 2019, but that condo part is hurting. How are home prices doing? Down 4%. Home prices overall. And if I look at typical single family value is now 673. This is for a single family house, not condo. I was just kind of comparing the differences. 673, and it's come down quite a bit. It looks like it actually peaked in 2024 in Marco Island at $750,000. Goodness, goodness, goodness. So there are areas where prices are down quite a bit. I mean, one of the things that throws a lot of people for a loop is that during the great financial crisis, like this period of time right through here, 2006 to basically like 2011 or 12, prices overall in the US fell like 23%. But some areas of the US prices went up. So even if you got like a big problem in the housing market, there's a good chance it's not going to be everywhere. It could just be localized, right? That's kind of what we're seeing right now. But man, that's condo stuff's interesting. Oh, you gave me a zip code, but I missed it. So I just did Marco Island. Hopefully that worked. Join me again and we'll do the other zip code for you. I had him on my channel. Did you guys check out that video? Jacksonville, like the Jacksonville market's really interesting right now where he lives. New listings and inventory are like gone. Like there's no explosion of inventory. Look, the bottom line is when you're a YouTuber and you find a video topic, a video method that works and you get views, the views are like crack cocaine. You know what I mean? They're like crack cocaine. You get like, if one of your videos blows up, you feel like you're like the smartest person in the world, mainly because you've been struggling trying to produce videos for so long that haven't done squat. So when you find one that works, you will glob onto that and keep doing that. I think John probably has best intentions, and I like him. I think he has good data, but yeah, he's leaned into the doom theory a lot. He did sell all of his real estate though in 2022, so maybe he's like, sold, and now he's like, I hope it keeps dropping so I can buy again. I don't know, but I think in general it's better to just present the data the way it is and not have an agenda, because then if things reverse and they don't follow your agenda, you kind of look like a fool. But in all honesty, like, people like doom. They just do. Like my doom titles, my doom videos, my doom headlines, my doom they get views. If you do something positive or like neutral, ain't no one gonna watch that. YouTube won't even present it to people. So you got to play the game. Got a lot of zip codes here. Private credit cracking. I mean, it probably will, right? Like we're going to see that. There's a bunch of monkey business in that area, and that's going to cause some type of distress. I would have thought the drawdown in Bitcoin over the last 6 months in particular, I would think that would have caused a massive distress level for homes, for sellers. Maybe it has, but yeah, I think now I think everybody can start to understand that the actual scale needed to bring prices down quickly, like 38%, based on some people who thought home prices would drop 38%. Now they're saying that's not going to happen. Obviously, they're not seeing that, but for prices to come down 5 or 10% nationally, you've got to have in 1 year, you've got to have a big, big, big level of distress selling. Vegas, 89138. Yeah, I was looking at Vegas earlier this morning. Let's look at Vegas. Vegas. Let's look at, well, condo prices are down 6% there. We know that. Let's look at inventory real quick. How much battery do I have left? Okay. So I got about maybe 2 or 3 more minutes I could do this, and then my battery is going to go out. I guess I have to get a new battery. Look at inventory. Let me make sure I get the right zip code. 89138. 89138. Yeah, look at this. Inventory, you've got 44% more homes on the market than 2019. 44% more. Active inventory year over year, you got 20% more homes on the market than last year. That's important if you want lower prices, right? 184 houses for sale at the end of February. You go back to COVID, you only had 53 homes. So a lot more houses. Let's hurry up and look at prices. Prices only up 0.7%, so they're still stubborn. There's still a lot of stubborn sellers there, I bet. So they are up. They haven't really crashed in that zip code. Typical value, what's that look like? $795,000. Wow. That's an expensive market in Vegas. It's not an all-time high, but you're close. You're right there at an all-time high. I mean, prices really have not crashed or fallen that much. Let's look at price reductions. How are those doing? Yeah, 15.6% of all sellers have cut their price. If you go back in history, that's low. Before COVID, it was like 25%. In 2019 and 2017, 23% of all sellers were cutting their price. Now you only have 15, only 15.6%. This tells me that the sellers there that are on the market just don't need to sell. They're like, I'll put my house on. If I sell it, I do. If I don't, I don't. No big deal. I'll try again next year. And there are people, you see these listings, I'm sure you can agree, where they just leave them on for like perpetually. I see it in investing all the time. People will have multifamily and duplexes on the market for years and never move the price. Doesn't cost them anything. Kind of annoying for the tenants to have to, do showings and whatnot. But yeah, that's Vegas. It's prices. Well, in that area of Vegas, prices are not crashing. Let's look at real quick. Let's look at prices around you to see what's going on. Yeah, so prices in 89124, whatever that is that the major area of Vegas? They're down year over year. Oh, that's not. No, I was like, that can't be right. They're up. I'm sorry, up 0.6%. This map is just not loading. Aren't you loading, map? Yeah, you're up 0.7% in your zip code, and this zip code to the north of you is up 0.6%. But then most of these areas around Vegas, I guess this would be the major area. Those are down. A lot of them are down, but not your zip code, right? But you would expect that out of an area like Vegas, probably a lot more supply where there is a lot more supply and prices are going to come down. Okay. All right. All right. If I did not get to you, if I did not get to your zip code, tune in next time. Hopefully by the end of the week, I will do another live. I'll be on longer next time, plugged into an actual outlet, so I can keep this thing going, because I like doing these zip codes for you. I like looking and exploring the markets. So join me at the end of the week. We'll do more zip codes. Check out that buyer guide. Tell me what you think of that. It's free. Download it. If you don't like it, if you think it needs change, or you think this doesn't make sense, let me know. I love feedback. But that's you can download that at jasonferrier.com/free. I'm working on a brand new Housing Nerd website. I'm working on, check this out. You can see this. I got Housing Nerd gear, right? I got some Housing Nerd gear coming out. I'm working on that. So I've been kind of MIA the last few weeks working on those things. And that's it. Have a great day out there. Make a lot of offers if you're looking for a house. Hunt hard. Look off market. Don't rush. Don't rush the home buying decision. Don't rush the home selling decision either. Think twice before you sell your property. You may want to keep it as a rental, depending on where you are. I'm the Housing Nerd, and I am out. Have a great day.